Royal Standley of Oregon Pacific Financial Advisors, offering securities through United Planners Financial Services member FINRA SIPC, guides clients with empathy in discovering and reaching their financial goals, and creates financial plans for clients so they can live their life by design. In these episodes, he relates his expert financial insights and discusses timely topics. Royal strives for excellence and has a passion for sharing his knowledge and supporting his community. Now, on to the show.
Hey, Royal. How you been?
I'm good. How are you doing, Eric?
I'm fantastic. I'm so excited to get into today's podcast, but you are in a highly regulated industry.
Yes, I am.
And because of that, sometimes we have a disclosure that needs to be read. So let's do it.
All right. Here's the disclosure for today. Discussions in this show are for educational purposes only. Information presented should not be considered specific investment advice or a recommendation to take any particular course of action. Always consult with a financial professional regarding your personal situation before making any financial decisions. The views and opinions expressed are based on current economic and market conditions and are subject to change. All investing involves risk, including the potential for loss of principal. Securities offered through United Planners Financial Services, member FINRA, SIPC. Advisory service offered through Oregon Pacific Financial Advisors, Inc. Oregon Pacific Financial Advisors and United Planners are independent companies, and neither Oregon Pacific Financial Advisors nor United Planners offers tax or legal advice.
Okay, now that we've taken our medicine, can we get on with the show?
Let's go.
Hello, and welcome to Life by Design with Royal Standley of Oregon Pacific Financial Advisors. Royal, what's going on?
Nothing much. Getting ready for the holiday season and the new year.
Royal, it's my favorite season.
Is it?
Not winter, and not Christmas or Thanksgiving. Soup season.
College football playoffs?
Oh, no, not even that. Soup season. It is soup season, full swing. I made a spicy fajita soup the other day. Steak fajita soup. Yeah, I had it for breakfast.
Very nice. Very nice. So what is your go-to soup?
That's one of my favorites right there. The other one that I have not made yet is I do steak and potato with smoked Gouda.
Yep.
Oh, it just, I mean, the taste combination there is just amazing. It's fattening, but I love it.
Yeah.
Right.
That's why it's so good.
Yeah. And wintertime, we should have a little bit of blubber, right? I mean, just a little, whatever, just to keep us warmer. That's my theory,
exactly.
at least.
Exactly. As snow starts to rack up on the mountains,
exactly.
just a little bit of insulation.
The mountains of Nebraska. Yes.
Where do you fall? I think the two most divisive soups, in my mind, French onion, clam chowder.
Why do you say that?
Clam chowder, I think, just gets a bad rap.
Really? I love it. It's one of my favorites.
Really? Okay.
I've never made it because I'm scared of it.
Yeah, absolutely. Absolutely.
But when you have good clam chowder, but I'm a seafood guy, so there's that. French onion, I could do without.
Yeah, I French onion, just not a fan. Not a fan. It's too much going on.
I think there's only two ingredients, but either way, yeah, we didn't come here to talk about soup though, Royal, right? I mean, we're talking about something else today. I mean, I love soup. We could talk all day, but
that's right. We're talking about throwing darts today.
All right.
Just blindfolded throwing darts.
Lawn darts, because when we were kids, lawn darts were a whole different animal.
They are. Now they're much safer. I don't know what we were thinking in the 60s.
We weren't thinking a whole lot. All right. So throwing darts blindfolded. What led to this podcast, Royal?
Well, it's the end of 2022. I thought we might just recap what a crazy, crazy year this has been.
Yeah.
And then also start looking into the future. We can break out our crystal ball and start making some predictions about what may happen once we cross over into the new year. And the other part of this is, I have clients asking me, what's going to happen next year? What are you looking out for? And I thought it'd be just great to kind of share that here on the podcast and talk about where we see the country going, where we see the markets going.
Mm-hmm.
And I will tell you right now, we are going to be way off on a lot of things.
Yeah. I mean, we do the best we can with the information we're given, but we know things can change at the blink of an eye, period.
Yep. And we know that things change very quickly.
Yeah.
This time last year, December 2021, the war in Ukraine was really not on anyone's radars.
Mm-hmm.
There was a little bit of talk, but really nothing. go back to 2019, December 2019.
Mhm.
There was one news story about somebody getting sick in China. And look what happened then.
Yeah, absolutely.
So we want to be really careful that, take all of this with a grain of salt. But, 2022, what a fascinating year.
Yeah. Yeah. I mean, not the end of COVID by any means. And now there's flare ups now that we're hearing about, but it was almost like we felt like we were getting back to normal. At least I felt that way at the beginning of 2022. I'm like, okay, I think we may be through this.
Right. And it's still hanging out there, but I think a lot of people have come to accept the risks.
Yes.
You've made that personal decision of, do I get vaccinated or not? And then you go out and you just try to do your best.
Mm-hmm.
And I think that's where a lot of people are. I've talked to people who have gone on cruises, and God bless them, good for them. Probably still a little ways out before I want to get on a boat with 1,000 other people.
Yeah.
But
that's a little risky to me. I'm not at that spot yet. Beach in Mexico, fine.
Absolutely.
Fine.
Absolutely.
I can get away from people. I can get in the water. Not on a cruise. You're stuck.
You are stuck. And So the end of COVID, I think, was what a lot of people were looking forward to in 2022. But then we just got hit by story after story this year that I think really took the wind out of our sails. I think, the biggest story I've been talking to people about this year has been what's been going on with inflation, seeing those insane inflation numbers that were coming out earlier this year. And then the Fed's very aggressive response by raising interest rates faster than I think they ever have in the past to combat inflation has really been, I think, the story of the year. How that has affected all the other parts of the economy, the increase in interest rates on mortgages, the changeover we saw very early on in the year where as we started to anticipate higher interest rates, we saw growth stocks that rely on cheap cash just plummet and fall.
Mm-hmm.
You had Netflix drop almost, I think, 75% earlier this year in value. So that changeover from what had been working very well over the last 10 years, which was, the big FANG stocks, Facebook, Amazon, Netflix, Google, that changeover there had a major effect on people's portfolios. The other thing we just mentioned, the war in Ukraine and how that kind of came out of nowhere, and all the knock-along effects there of what happens when oil gets up to $125 a barrel.
Yeah.
And how is that going to be affected? And then you have just continued to see unrest around the world, with the zero COVID policy in China and the demonstrations we're starting to see there, the demonstrations we're starting to see in Iran. And then I think the ongoing discussion about, what is America? What should it look like? And I think some of the arguments that we had. And I got to say, I was very thankful getting through the November elections without too much drama, too much chaos there in those elections. Because after 2020, I think we all had a little pit in our stomach of how's the next one going to go.
Yeah.
So we'll see what 2023 brings with that. The other big story I think in my mind is the hubris of billionaires between what's happened with Elon Musk and buying Twitter.
Yeah.
And what seems to be him just lighting $44 billion on fire. And then also, and this story probably doesn't affect, kind of mom and pop investor as much, but what happened with FTX, the crypto exchange, and their CEO, who was the youngest billionaire last year, under 30, who allegedly might have defrauded billions of dollars out of customer accounts. And what does that do for that space, which has been, I think on a lot of people's minds, okay, well, what does this really mean? That really knocked the sales out of crypto there as well. So, and then finally, I think the big story is what the heck is going on with Tom Brady?
What?
As a Tampa Bay Buccaneers fan,
okay,
one last ride with Tom Terrific, and he gets a divorce. He's going back and forth. He's taking time off from the team. He just looks washed up, and I think that's really where we should spend the rest of the podcast is debating Tom Brady and what in the world is going on with his performance on the Bucs.
Well, then you're going to have to carry the rest of this podcast because I have no idea what's up with Tom. Tom, if you're listening, dude, like email in or call Royal and just let him know what's going on. He's worried.
Yeah.
Frankly,
I am. I care about him and his ability to complete a pass.
So speaking of your CEO, he was slated to talk at an event, right?
He did.
And he did. And I just heard that in the news this morning. I'm like, against what every lawyer in the country is telling him, all of his lawyers that he's paid money to, who tell him, shut up, don't speak, please, for the love of God, don't speak. He's talking. He's like, I don't care what they say. I'm gonna talk. And I don't know if to applaud him or think you are also lighting billions of dollars on fire. I'm not sure.
Yeah, I mean, that was a fascinating interview that he didn't. He said it just got away from him. As these things do.
Like riding a horse.
Yes.
There it goes.
Yeah, but I'm sure he will have a very, very interesting 2023.
Yes.
Once he leaves the Bahamas and goes to a country with extradition laws, exactly, I'm sure he'll be picked up.
That's it.
So beyond Sam Bankman-Fried, who will be having a very interesting 2023, let's jump into what we're looking at for 2023.
All right.
Now, do you have anything that you want to start with there, Eric?
Soup. I want to start 2023 off with some good soup, Royal. Other than that, I have no plans because, like you said, I'm just looking back at 2020 and the roller coaster ride of everything that happened and everything that's going on. I think of housing specifically just because that affected me personally, selling a house, moving into another, seeing the absolute storm in a positive way. It was for the first 3 months. And then last report I heard I think last week, housing's down 30%. It's crazy to me. And then, all the other markets, everything else. So I have no idea, besides building a bunker and hiding for 2023, which is not a positive idea in my mind. I have no plans or ideas of what's coming. So please enlighten me.
Okay, perfect. Well, I think that's a good place to start there is with interest rates, because that's going to be, I think, the ongoing story there going into 2023. We are starting to see the effects of those interest rate increases that the Feds have done, and we're starting to see some of those inflation numbers come down. And I think that's the biggest positive we can have. And I think why we're starting to see the markets rally going into the end of the year is if we can have maybe some flattening out of that yield curve that we're seeing, if we can start to have some expectations of where interest rates are going to maybe top out, those are going to be good things there. So the more we see that inflation number come down, the better off we will all be.
Yeah. Because
also nobody wants to live in a world with 7, 8, 9% inflation. That is so destructive to people's pocketbooks.
Yeah, absolutely.
Yeah. And so, we had Jerome Powell come out yesterday. This podcast will come out in about a week or so, but he came out yesterday and said, hey, we might be starting to take our foot off of the accelerator on interest rate increases here in December. So we'll see what that looks like towards the end of this month, if there is another major increase. And then really, as they set expectations for what they're seeing in 2023, that's really going to kind of, I think, set up the market for some recovery there. The biggest question in my mind, though, is it too late now with interest rates, on the 10-year Treasury up above 4% right now? Is it too late to avoid that recession that higher interest rates could cause? And that we will just have to kind of wait and see on. We still have a very strong employment number, which is excellent. We want people to have jobs. We don't want people to lose their jobs. But we need a little bit more slack in that before I think we would even get to a recession. So if we can kind of keep the good things going and bring down those negative high inflation numbers, that would be lovely. No one wants to go through a recession.
Yeah.
And if we do, we want it to be as mild as possible.
And quick.
Yes. Yeah. The other thing, what happens with housing? You mentioned that 30% number, talking about kind of those regionalized housing numbers. We do think we're going to see some pullback in housing prices next year. I think a lot of those big numbers that we've seen this year have been in kind of coastal cities, especially on the West Coast, that really got overinflated with low interest rates and the amount of demand there. So we'll see what happens with those housing numbers. We aren't expecting another 2008. The biggest reason why is no one's using, for the most part, adjustable rate mortgages like they were in 2006, 7, and 8.
Yep.
So you don't have that reset that higher rates can hit you with. Most people, and I'm counseling people, if you refinanced in the last 2-3 years and you have a 3% interest rate, look at that almost as an asset.
Yes.
Because at this point, you're basically paying pretty close to zero to borrow hundreds of thousands of dollars tied to your home. So that's something that you want to be really careful with when you talk about refinancing and pulling money out of your home. So the other big question with the higher interest rates is what happens with the bond market. Bonds have been absolutely destroyed this year, kind of across the board. Earlier this year, before we started to have that little bit of rally in interest rates, we were seeing a lot of bond mutual funds and bond indexes down 18-19% for the year. And that's people's safe money, or at least they thought it was safe money. But when something drops almost as much as what the stock market does, that's hard to swallow. Yeah. So we still believe in some allocation to bonds, not necessarily get rid of everything, but we're definitely looking at what do these higher interest rates mean for all of those bonds that were issued and that people are sitting on at very low interest rates, because that price destruction as interest rates rise, that's probably going to be with us for a while, because I don't think we're going back to where we were for the past 2-3 years, where you could get a mortgage for 2.5%.
Yeah, that's a good point. And out of curiosity, what are you suggesting to those clients that are thinking of buying now? And maybe if they're not in cash and able to purchase property with cash and they're looking at these rates, what are your thoughts?
So I think really, unless you have to buy something right now, I'd probably say just hold off for a little while. Let's see what happens as we get through winter and see if we have that pullback in prices and how much that will be. Personally, for a lot of folks, I would say if you do need to buy, just know that you will probably get a chance to refinance possibly in the next couple of years at a lower interest rate. Because if we do start to have a recession, we do start to have weakness in the economy, paired with that lower inflation number, we'll probably see the Feds give us some relief there from the highs that they've pushed the interest rates up to. So,
got it.
And I think that was really the environment that our parents were in the 70s and 80s.
Mm-hmm.
Hey, we got a mortgage at 18%, and we're just going to try to refinance every few years as interest rates come back down. Hopefully we won't see 18% interest rates on a home. Yeah. But I mean, looking at kind of the numbers there, if you can save 1% on your mortgage, that's a big deal. That's a big deal. So kind of being patient on buying something if you can, and then just being very aware that you're not going to hold some of these mortgages for 30 years. You're probably going to look for opportunities to refinance.
Yeah.
Yep. As interest rates kind of normalizing, maybe come down a little bit more.
Okay.
Yeah, the other thing is what happens with the markets. We're starting to see the big banks come out with their estimates of where the markets will end up in 2023. I don't think anybody's really come out with a lot of good news. A lot of it is, hey, we're going to have a rough and bumpy 2023. The estimates I enjoyed the best are those that say, hey, we think the market is going to be where it's at right now at the end of 2023. S&P is around 4,000. It'll be around 4,000 at the end of 2023. Wouldn't that be nice if we could just do that without the volatility we'll experience in between?
Yeah, right.
If only these markets just moved in a straight line and that's how it was. But we probably will see a lot of volatility. we probably will retest some of these lows at some point next year. So, we're still being cautious there. For those who are buying into the markets, those with a 401k, really encouraging people, dollar cost averaging works over the long run. You don't want to wait for the markets to recover to start investing again. You actually want that volatility. So for most people, keep saving in your 401k. Don't worry about these, ups and downs unless you're, getting really close to retirement. Talk with your advisor about what's makes the most sense. But dollar cost averaging, these are the times you want to be dollar cost averaging as we have periods of volatility like this. So that's kind of what we're looking at for inflation, kind of negatives, the unknowns. The positives, though, is we are going to have the biggest cost of living increase in Social Security I think we've ever had.
Yep.
We're talking about, a very good increase to Social Security. That's a positive for a lot of retirees who are just trying to get by.
My mom and dad are very excited, Royal. We were just talking about it yesterday, and he's like, "Yeah, this is going to be a nice raise." I'm like, "Sweet, Pop, that's great."
And did you discuss what types of soups you would spend that raise on?
Yeah, I deliver him soup because he likes to taste the different ones that I make. My mom doesn't like anything spicy, so I got to figure out a soup that I can make for her. I think it's going to be a broccoli cheddar. However, yes, I love taking him soup.
Good. Excellent. So the other thing that's happening is our tax brackets. So the federal tax brackets are tied to inflation. So we're seeing about a 6 or 7% increase in the tax brackets. So that, probably the tax bracket we look at the most there for most of our retired clients is, that big jump between 12% and 22%.
Mm-hmm.
And so right now for a married couple, that 12% tax bracket will jump up to about $89,000. Meaning that if you're under $89,000, you're paying a 12% tax to the feds. And that's where we try to do a lot of planning, because that jump between 12 and 22 is kind of the biggest one on the schedule there. So we try to build a lot of our planning around keeping people in that 12% tax bracket once they are retired, if possible.
Okay.
That's
good.
The other thing I'm talking to folks about, especially if we think that interest rates might peak here in 2023 and then come back down, some is looking at locking in higher yields using things like CDs, using things like fixed annuities. That ability to kind of lock in a good solid rate. Right now we're seeing CDs in the around 4% right now.
Mm-hmm.
And then some fixed annuities, paying a little north of 5%. It's not a bad strategy to just lock that in for a longer period of time. And just not really worry about that money if, you want to have that safety and you want to have that security of knowing, hey, I know exactly what I'm going to get, and I don't have any interest rate risk. I don't have any risk of losing principal like you would with a bond if interest rates keep going up.
Mm-hmm.
So from the inflation standpoint, I think it's wait and see. Just so many factors go into that, but starting to see those numbers come down, I think, is a big positive. The markets have responded really nicely to that. And for the most part, I think everyone just wants lower inflation. Yeah. We don't want to be paying $12 for a dozen eggs.
Exactly.
Nobody wants that. No. And those prices don't adjust back down when inflation goes down. We're going to be stuck with this.
Exactly. Right. I mean, nobody's like, oh, let's go ahead and lower all our prices because we don't want to make money.
Exactly. The other stories we're watching, what happens with Ukraine. Mm-hmm. It's going to be a brutal winter over there. The question really becomes, how long can Ukraine keep getting support from the West? And what is Russia's appetite for continuing this slog there that they're in right now as they get more and more bad news about this conflict. So the other important thing is what happens with China and Taiwan. We had a little bit of saber rattling about that with Biden and Xi Jinping's recent meeting. I think everybody doesn't want that to become another Ukraine, because that's an ugly one. So the other thing we're seeing is COVID policies in China. They have been really draconian about how they're trying to deal with COVID.
Yeah.
Lots of lockdowns, lots of excessive lockdowns.
Yeah. Physical lockdowns. Yeah. Bolting their doors shut kind of lockdown.
Right. We thought it was bad when, the hostess at the restaurant would ask us to wear a mask.
Yeah.
China, a little bit different story there.
Mm-hmm.
So we'll see what happens there and what that does to supply chains, if that helps improve kind of the flow of goods out of China. And then finally, American politics, that wonderful place that we we have a divided Congress now, which will probably mean that we're not going to have any sweeping legislation. So I think it'll be interesting to see kind of where more of the centrists in both parties can come together and maybe pass some legislation that would make sense for the country and kind of work on the things that they can agree on, and work through some of these issues that we definitely have coming up. And then somehow, I don't know how, we've already started the 2024 campaign for president.
Yeah.
We've already had Trump come out and announce that he's running. We had Kanye announce that he's running. So hopefully, and we also had Kanye ask Trump to be his vice president. So things are looking up. Things are looking up.
Yeah. Yeah. That's a flip of a coin for me right there, Roy.
Yeah, those are your two choices right now. Hopefully more people step forward. And then the big question is, what does Biden do? He just turned 80 years old. We'll see what happens there and what the new leadership looks like in both parties, I think, because we're starting to get a little long in the tooth with the leaders of both parties.
Mm-hmm.
So that's kind of what we're seeing for 2023. We're excited about a new year. 2022 was a roller coaster, so maybe a little bit of smooth sailing would be nice, but we're really looking forward to 2024 for that.
So let's break this down. I mean, you've spoken about a lot of things, possibilities, a lot of unknowns. What are you doing specifically to help your clients?
So this is how we help our clients. Number one, everything we do comes back to our financial plans for our clients.
Mm-hmm.
So reviewing and updating those financial plans is the most essential thing that we do to provide, I think, peace of mind to our clients. Just being able to sit down and say, here's where we're at. Here's one or two possibilities where we think we're going. What does that look like? So really sitting down and stress testing plans for higher inflation rates. What does that look like?
Yeah.
We've used a 4% inflation rate for the last 15 years. Planning for retirement, we know that this is probably more of a 1-year spike, but we can look at that and say, well, what if it runs higher than that? What if investment returns are lower? Met with a client yesterday where he just wanted to kind of get some reassurances there and say, okay, worst case scenario, what does it look like? What if I don't get much returns over inflation? What happens then? And I think just being able to address that and say, we've done the financial plan. You're fine for the next few years, and we're going to keep updating the financial plan. So if there is a change that needs to be made, we're doing it well before we're in a crisis period of time.
Yeah.
And I think that helps put people's mind at ease that, hey, you're okay now, and we're going to look at this again in a year or two and retest this. And if a change needs to be made, we're going to tell you and be upfront about that.
Yeah.
The other thing we do is reviewing investment strategies. We're always looking at the way the recommendations that we make are working, how they're holding up based on what's going on in the economy and the markets. And the big one right now is understanding the risks in your bond portfolio and what can you do to manage through that period of time. Are you getting the best managers you can? Are there other products out there that can help lower that risk? And then finally, when we have a recession, there's giant opportunities that can arise if you're at the right place at the right time, and usually if you have some capital in the bank to take advantage of those. We saw that kind of throughout the 2008 2009 crisis of folks who were able to buy homes at very low prices because they were willing to step in and take that risk. So we're counseling our clients about that, of saying, okay, well, What opportunities do we think might be on the horizon? And then finally, acting as a sounding board. We have clients just call in and say, hey, is everything okay?
Mm-hmm.
Hey, I'm worried about this. What are you hearing about this? I had a client call in and say, hey, tell me about this thing where we're going to just run out of diesel fuel. And I was like, okay, let's talk through this. What does this actually mean? What happens? Are we really just not going to have diesel anymore? Or is it just going to be that prices go up for a period of time as there's shortages? So acting as a sounding board and kind of stepping away from what can be a horrible news cycle where everything's bad and everything's going wrong in the world.
Yeah.
It is a real benefit for our clients just to get a different perspective on things. We're looking at these things all the time. And we've been through this enough where we know kind of where the big things are and what are the things that probably won't come to fruition.
Yeah. Well, I think you missed something on your list, Royal, honestly.
Is it soup?
Always comes back to soup. No, you're proactive. The other thing that you're doing to help your clients and our listeners is this podcast. You are proactive in making sure that you are, from a guy who has experienced it before, and I've heard a lot of people's same experience. They've worked with an advisor early on that maybe they just hid under their desk when times got tough. And we had to reach out to figure out what was going on. You're on the front line saying, you know what, here's what's going on. Let me tell you before you get it from some, media outlet that is looking to sell you on something. Let's just talk about the facts. And I love the fact that you're fielding some phone calls that people are hearing things in that media, the diesel shortage or running out of diesel. We heard so many people ringing the alarm on that one. Okay, what does that really look like? And I love the fact that you're there and open about it to have the conversation. But more importantly, you're proactive about these things and putting out podcasts and educational material all the time. So that's what I would add to your list.
Perfect. I'm glad it wasn't soup related.
Okay. Next time it will be. How about that? All right.
Love it.
Anything else? Any closing thoughts for today's podcast?
Really, the closing thought I would say is if you have questions, you have concerns, just give me a call and give our office a call. We're happy to sit down and walk through those concerns and walk through that financial planning to really give you some peace of mind and some direction on how best to handle your finances so you get through these periods of time and hopefully give you the information that you need to make the best decisions that you can.
Yeah, absolutely. How do they reach you?
You can visit our website at opfa.com or give our office a call at 541-772-1116.
All right, Royal, thank you so much for your time today. Thank you for being proactive and helping me learn along with the audience. I appreciate it.
My pleasure.
Yeah, you bet. And our last thank you, of course, goes to the listening audience. Thank you so much for tuning in and listening to the Life by Design podcast with Royal Standley. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when Royal comes out with a new podcast, it'll show up directly on your listening device. And we humbly ask that you share this podcast, rate it, and leave a review, as this actually does help others find the show. Again, thank you so much for listening today. For everyone at Oregon Pacific Financial Advisors, this is Eric Johnson reminding you to live your best day every day. And we'll see you next time.
Thank you for listening to the Life by Design podcast. Click the subscribe button below to be notified when new episodes become available.